Welcome back to Explain the Charts, and today we're taking a look at USDCHF, the US dollar-Swiss franc pair, and seeing where we are in the market, what's happening, and what we can expect based on the news and the chart data. The US dollar has been weakening against major currencies in recent weeks, and analysts are pointing to the potential uncertainty surrounding the upcoming US presidential election as a significant factor. They're also citing a softening US labor market as a reason for the dollar's weakness. The Swiss National Bank, SNB, has also lowered interest rates, which could further weaken the Swiss franc. This is interesting because it seems like both the US dollar and the Swiss franc are weakening, and this may be contributing to the recent price action that we're seeing in the USDCHF chart. Let's start with the daily chart and get a look at the overall trend. Zooming out to the entire chart, we see a clear downtrend starting at the beginning of August, but now there are signs of a potential reversal. The pair has been bouncing between the 0.85 and 0.88 range, which is interesting because both these levels act as support and resistance, depending on how the price is moving. The most recent bounce off the 0.85 level is a strong sign that buyers are stepping in to defend this level, suggesting a potential reversal in the near term. The daily chart is showing us a lot of activity, and it's telling us that we're in a volatile period for USDCHF. If the pair can break above the 0.88 resistance level, then we can expect a stronger bullish movement in the short term. Now, let's switch to the 1-hour chart and look at the price action in more detail. The recent price action is characterized by a lot of chop, with the pair trading back and forth within a relatively tight range. The 100-hour moving average has been acting as support, with the pair bouncing off of it on several occasions. The 200-hour moving average is currently trading just above the current price, and it could act as a strong resistance level in the near term. Looking at the last few hours, we see a clear bullish momentum, with the pair breaking above the 100 and 200-hour moving averages. This could be a sign that the bulls are taking control of the market, but it's too early to confirm anything for sure. Let's go back to the daily chart again, because we need to look at a specific time frame that is very interesting. Let's focus on the past 3 weeks, specifically from the end of August. We see a clear downward trend, and on the first day of September, the pair dropped significantly. This drop can be linked to the news from the Swiss National Bank's recent interest rate cut. The daily chart is showing us that the recent news has had a major impact on the pair. But the interesting thing is that after this drop, the pair started to bounce back, suggesting that buyers are still interested in this pair. Let's go back to the 1-hour chart and examine the current price action, because we want to see what the 1-hour chart is telling us about the momentum right now. We see that the pair has broken above the 200-hour moving average, and it is now testing the next resistance level at 0.85. The 1-hour chart is showing us a clear bullish momentum in the short term. However, the volume is still relatively low, and this could be a sign that the bullish move is not yet sustainable. To get a better understanding of this short-term momentum, let's take a look at the 15-minute chart. This time frame is providing us with the most detailed look at the price action. We see that the pair is currently trading above the 20-period moving average, and this is a bullish signal. The price is showing a clear upward trend, and the volume is increasing, which is a strong sign that the bullish momentum is gaining strength. It's interesting to compare this to the 1-hour chart, which is still showing a relatively low volume, so this is a confirmation that the 1-hour is picking up momentum. The 15-minute chart is providing us with a lot of bullish signals in the short term. The pair is currently trading above the 0.85 level, which could act as support in the near term. If the pair can break above the 0.86 level, then we can expect a stronger bullish movement in the short term. It's very interesting to see how the short-term momentum is looking very bullish, while the overall trend on the daily chart is still down. This tells us that there is a lot of volatility in the market and traders need to be cautious. In conclusion, the news is showing a lot of uncertainty and volatility, which is reflected in the USDCHF chart. The daily chart is showing a downtrend, but with a potential for a short-term reversal. The 1-hour chart is showing bullish momentum, with the pair breaking above the 100 and 200-hour moving averages, but the volume is still low. The 15-minute chart is showing a strong bullish momentum, with the pair trading above the 20-period moving average and increasing volume. The key price levels to watch are 0.85 for support, 0.86 for resistance, and 0.88 for a potential breakout. We're in a volatile period for USDCHF, and traders need to be cautious. Keep an eye on the news, especially from the US Federal Reserve and the Swiss National Bank, because these could have a major impact on the pair. The next few weeks will be crucial for USDCHF, and we'll be watching the price action closely to see if the short-term bullish momentum can overcome the overall downtrend. Remember, always do your own research and never risk more than you can afford to lose.